Hi guys, so this is the Chapter 19 lecture for the daily financial practices. This will look a little bit different than what is in your syllabus reader because I have taken out some slides and put some other ones in. So this version of the PowerPoint is uploaded to the Week 13 module for you in Canvas if you would like to have a hard copy for yourself. Okay, so we start with patient fees, and patient fees are always a major part of managing the clinic's business details. We are responsible for informing patients about charges, collecting payments, making credit arrangements if that's needed for the patients, making sure patients and their providers receive the full benefits of their medical insurance. All of those things are our responsibility as staff of the medical center. One thing that goes a long way is a positive attitude, and a positive attitude that anticipates that a majority of patients pay their medical bills in a timely and reasonable manner will prove to be helpful in completing any of those above tasks. So if you automatically go in to work every day assuming that people aren't going to pay their medical bills, that's going to put you in a negative state of mind, and that won't help accomplish anything. So determining fees, fees are determined a number of ways, one of those of which is managed care contracts. Managed care contracts pay predetermined fees. Concierge type medical groups will collect additional fees on top of that. And then provider fees for procedures that are billed and reimbursed have to be done so according to standard insurance guidelines, and those are the UCRs, which are usual, customary, and reasonable fees. That is the fee schedule that is often used by Medicare and most major insurance carriers. Usual refers to the fee that is typically charged by a provider for certain procedures. Customary is based on the average charge for a specific procedure by all providers practicing the same specialty in a particular geographic area. And I'll explain that in just a second. Reasonable refers to the mid-range of fees charged for said procedure. So what customary means in particular is that, say you want to have an EKG done. So basically all providers within Solano County are going to fall within a specific reasonable range of fees to have that EKG done. So one doctor isn't going to charge $700 for an EKG while every other doctor in the county is charging $199. So that's kind of what customary means. It's the customary fee for a procedure. So when we discuss fees with patients, how we go about that is going to depend on the type of medical facility, the needs of the practice, and the professional services that were rendered to the patient. Every practice will have an established fee schedule, and that's going to determine the specific dollar amount that will be charged for each service offered. We want to make sure that we notify patients of our fee policies and what they are expected to pay prior to them being seen. Some Medicare patients will require advanced beneficiary notifications. Those are more commonly known as ABNs. And some Medicaid patients will have to have Medicaid waivers. And what that tells Medicaid and Medicare patients is that those government-funded insurance programs may not pay for those services if they are received from the provider. So ABNs and Medicaid waivers are the only legal means a clinic has to collect payment on charges that are not allowed by Medicare or Medicaid. This needs to be in writing and indicate the type of procedures, the total financial responsibility of the patient, and the reason why this is the patient's responsibility. For example, a lot of times patients who are hyperlipidemic need to be on cholesterol medication, and the doctor would like them to have their labs drawn to test their total cholesterol levels, or to have a lipid panel done every 90 days so that they can make adjustments to their medications. Well, Medicare only covers those blood tests, that lipid panel blood test, every 180 days. So ABNs have to be signed on those occasions in between when Medicare will cover that lipid panel test in order for that patient to have that blood drawn. So that means that every other time that patient, if their doctor won't prescribe their medication unless they have those labs drawn every 3 months, and Medicare only pays for every 6 months, that means that every other time that patient goes to have that lipid panel drawn, that patient has to sign an ABN and know that they're going to pay out of pocket for that lab test. However, on the ABN, as it says here, they do have to disclose how much that lab test will be out of pocket for the patient. And then the patient has the option to decide whether to do it or not. Okay, adjustment of fees. So Medicare, Medicaid, Blue Shield, private health insurance adjustments, you want to make sure that you can explain how accepting assignment will affect their payment things. And we went through some of that when we went through the different claim forms and insurance math. Also, adjusting fees, sometimes we need to explain any discounts that are offered. Lutheran Preferred is one type of insurance in school that I taught at before, and I left it in this lecture just to remind me to give an example here. This particular type of insurance was offering a discount to employees of Lutheran Health Systems, and so it was a pretty nice little discount, and so that would come off and be an adjustment of fee. So if you were an employee of Lutheran Health Systems and you carry the Lutheran Preferred Insurance, then you get a nice little chunk of change off your bill for using a Lutheran facility. Okay, so limited income patients, sometimes we have to do write-offs for those. The provider may write off a portion of the fees. Now, there are some downfalls or some pitfalls of adjusting fees that you should be aware of. First of all, it's hard to accept all hardship cases and still remain a profitable practice. This is the thing. You do not want to be insensitive to people's hardships. However, nearly everybody you meet will have a hardship story, or everybody's got some kind of story where, some kind of business that they're going through. And so the thing is that, when you accept all hardship cases, it's going to make it very difficult if you're writing off bills left and right to remain a profitable practice. Secondly, you may need to refer to a free or reduced fee type of clinic. Referring office should provide those names and phone numbers. So if you're working for the provider who is referring out to the free or reduced type of clinic, then you want to provide those names and phone numbers to the free or reduced type clinic. Also, I put a couple extra notes down here. Medicaid is mandated to charge every patient the same amount for similar services rendered. Adjustments for patients must be made with limited income. Medicare, Medicaid, Blue Cross, Blue Shield, and private health insurance all have adjustments that can be made. And then we're going to talk about refunds in just a second. So refunds may occur when insurance pays more than anticipated. I don't see that happen very often, but apparently it does. If that's the case, then we would prepare a check for the overdue amount to a patient, and you have to enter the transaction on the day sheet, which would be in their chart, their EMR chart, and also the patient's account. Then you want to total the balance, which may bring it to zero, to make an adjustment there. Some other things that are going to factor into patient fees are co-payments. We've talked about this previously when we were working on our insurance math chapter. So some insurance policies, especially HMOs and other managed care policies, will require the patient to make a payment of a specified amount. That payment must be collected at the time of the visit. For example, $10 or $20 is usually a copay amount. Although a lot of times nowadays the insurance copays are getting higher. My one copay is $40 for a regular office visit, and I think $65 or $55 maybe for a specialty office visit. Whereas for a very long time copays were $20 and $35. So be mindful of the fact that those copay amounts may have been lower in previous years, and they now, thanks to the health insurance exchange, are becoming increasingly higher. Coinsurance is a percentage of the charges, which is usually the 20% of the 80-20 plan. A deductible, we've talked about this before, that's the annual amount of money that the insured must incur for medical services, and then they have to pay out of pocket before the policy begins to pay. So the language of the policy is going to specify the terms of their coverage, and then the deductible amounts may vary from $100 to $1,000 or more. If it's a family deductible, I've seen family deductibles as large as $7,500 for the family. So there are some pretty hefty deductibles out there. So here's an example of a billing statement to kind of give you an idea. So this is for patient Manuel Ramirez, and so it's got his address and all that business up there. These are his service dates. It shows which patient was treated. In this case, it was Mr. Ramirez. And then it shows the description of service, the charges, his payments. He didn't make any payments. And so then it shows what his insurance paid, any adjustments. And so all of this right here is the insurance math that we were working out previously. And then any balance left over that we would bill the patient. So this just kind of gives you an idea of what a billing statement would look like. Now, on these statements, though, you will notice that down at the bottom, it looks like Mr. Ramirez is having a little trouble paying his bill, because he has $937.80 that is 61 to 90 days past due. So once it gets to 61 to 90 days past due. Once it gets to 91 days past due to 120, I believe, is when they charge it off and send it to collections. Okay, so making credit arrangements and helping patients who cannot pay. Sometimes we have to help with payment planning. If you are working in an admin position, you may be tasked with helping patients plan out their payments. So putting them on a monthly payment arrangement or something. I am a big advocate for getting them to pay something, even if it's $10 a month. $10 a month is better than no dollars a month. It keeps them responsible. It helps them stay on track. It helps them lower their debt. It helps them feel like they are not just running from their debt. This is the thing about good people, and that kind of ties into this, recognizing that there are patients who can have difficulty paying their bills. Economic changes, loss of jobs, loss of insurance, rising costs of healthcare, unexpected emergencies, or other expenses. By and large, most people do not want to be deadbeats, and by and large, most people want to do the right thing. And so treating somebody like, they're scum just because they can't pay their bill for a while does not in any way prompt them to want to then go pay their bill. So when doing these payment planning sessions or putting people on payment arrangements, I have no problem, asking for $10 a month. $10 a month at least accomplishes something, and it will keep them out of collections and keep that off their credit report. So go with that if that's what you can accomplish. Also, usually most offices will take credit or debit cards over the phone to resolve any debt. However, debit cards are linked to bank accounts, and if there's no money in the bank account, there's nothing there for you to debit. And credit cards, if people are already struggling to pay their bills, those credit cards, if they have any to begin with, may be maxed out. So you just got to be mindful of those things. Those who cannot pay often have to make difficult choices between, providing for their family or receiving health care. And I don't know very many people that will choose health care over providing food for their kids. So just be mindful of those things when you're working through these more difficult situations with patients. Okay, so online banking, in my opinion, is the best thing ever. I love online banking. It allows you to check your account balances, transfer funds between accounts, pay bills electronically, check credit card balances, view images of checks and deposits, and then download account information 24/7. If you are fanatical about your banking, then you probably already use online banking. That is one of the very first things I do every single morning before I even get out of bed, is I wake up and I log onto my bank accounts, because you can do that with thumbprint now, and and check all my bank accounts and make sure nothing is crazy looking and pray that there's still money there. And then I get up and get ready for the day. So you can do that in an office also. I don't know necessarily, depending on what role you have in the office or in the facility, what your employment details. You may have access to their online banking documents, which will allow you to settle up account balances and to monitor the banking accounts for the practice. Okay, so there are a couple of types of accounts that you should know about. The first one, the checking account, is always going to be the primary account. When selecting an account, if you're establishing a new account, the MA should compare the features of different checking accounts from both within the same bank and then also at competing banks. Things that you should consider when looking for a new checking account are check charges and fees for checks. Do they give you free checks, or do they charge you to print checks for you? Are there ATM access fees? Do they have after-hours deposit available? Is there initial deposit and balance requirements? A lot of times checking accounts will require like a $15,000 minimum deposit and balance for 60 days. Overdraft protection, is that available? Any additional services that are provided at no extra charge, such as online banking access, which is usually pretty status quo these days. And then consider the convenience factor and don't just choose the bank who offers the lowest fees. Savings accounts. We have money market, and that pays higher rates of interest. It requires a higher initial deposit and the maintenance of a higher balance. It's useful when access to money isn't frequently needed or when saving for long-term investment goals. Interest generating checking or savings accounts are another option, and the interest is generally minimal on accounts that give immediate access to funds. I had an interest generating savings account once when I think I was probably 18 or 19. I think it was $50 in there for like 3 years. I forgot all about this account. I opened it actually for my daughter. Forgot all about. And in 3 years of not touching this $50, I generated a whopping 17 cents of interest. So you definitely are not making a ton of money off of those interest generating checking or savings accounts. So just kind of take those things into consideration. Types of checks, you have cashier's check. That is guaranteed for the amount written. It's drawn on the bank's own account. So you have to go into the bank, purchase that cashier's check from the bank teller, and then it's a bank check. You have a certified check, which is the depositor's own check that the bank has verified with the date and signature that the check is good for the amount written. So basically what happens is you go in, I write a check off my account, and I take it into the bank, and the bank will sign and date it and say, yes, she has the money in her account. This check is good for this date. Money orders are purchased with cash. You can get those at the bank, but most people get them at the gas station because they're cheaper. A voucher check is a check with a stub attached to indicate the invoice dates, the services provided, etc. You see these a lot with payroll checks that are used in clinic settings for accounts payable. I'll show you a picture of one of those in just a second. Traveler's checks or ATM machines when traveling, those are available. Usually you can get money available in $20, $50, $100 denominations, and these checks will require signatures when purchased and when used. However, banks today advise using ATMs instead in places where they're available. So instead of using traveler's checks, the banks would rather you withdraw money from ATMs instead because they feel like traveler's checks are not as safe as ATM machines. Okay, so here's an example of a voucher check. So you can see the check here, which is made out to A1 Office Supply, signed by the doctor and all that business. And then over here is the check stub with all of the information for office supplies, file folders, 5 dozens, and she paid $47.50 for that 5 dozen office supply file folders over there. All right, so depositing checks. Usually in an office or practice, checks are deposited daily. Endorsements. Sometimes practices or physicians, depending on where you're working, will have a rubber endorsement stamp from the bank that should be used to immediately imprint the backs of all checks received from patients and in the mail. So all checks have to be stamped before depositing, and usually those stamps will say for deposit only and then have the practice information, account information on it. We never accept third-party checks, and those would be checks that are written to the patient from another person or company, unless it is an insurance company check. Deposit slips must accompany all checks and monies that need to be deposited into the bank. Here's an example of a deposit slip for you. And so here we would list all items separately, so all checks and their amounts, and then any total amount of checks, and then total amount of cash, and then total amount of coins that we have there. So cash on hand, medical offices need to have cash available on a daily basis. It's used for change when the patients pay with cash and the change is required. Receipts are required and pre-numbered, thus monitoring for any loss or theft. We have to balance out our cash daily at the end of each day, and the amount of cash received is deposited by the bank, or into the bank, excuse me. The remaining amount in the cash drawer will be the same as the beginning amount. So anything we take in extra above what we started with that day is going to be deposited so that we end up with the same amount every day. The day's cash received must match the cash control on the daily sheet. Ideally, only one person should be in charge of handling the cash drawer, and there's a reason for that. The more people who you have their hand in the honey jar, the more things start to get sticky. And so we try to only delegate this cash handling task to one person, so that there's only one person that could possibly be responsible if things are amiss. The cash drawer is for patients only and not to be confused with petty cash, so that's important to remember. Okay, so accepting checks. When we are accepting checks, we want to inspect the check for correct information, things like the date, name, that the correct amount is written in, and that they signed the check. Again, we do not accept third-party checks unless it's from an insurance carrier. If you have to deal with an NSF or a non-sufficient funds check, you want to call the bank that returned it and verify the availability of funds. If funds are available, you want to immediately redeposit the check. If it still comes back NSF, then you must perform two bookkeeping functions. One, deduct the amount from the practice's checking account balance, and then two, add the amount back into the total amount due by the patient in their account. You want to enter the sum in the paid column in parentheses and increase the balance by the same amount. You may also need to add a return check fee. Most places charge between $25 and $50 for return checks. Place a brief explanation in the description column if you're doing manual bookkeeping, and then follow office procedure for notifying the patient of the return check. Lost or stolen checks must be reported to the bank immediately. You want to issue a stop payment order to prevent unauthorized cashing of the check. Usually the banks will charge you, $10, $15 to put stop payments on, but that $10 or $15 is typically well worth the money if you consider the damage that could be done with a stolen check. Sometimes a bank may place a warning on the account advising bank personnel to be careful about checking signatures in case forgery has been attempted or is being attempted. So there's a couple of reasons why we want to write and record checks. First of all, to pay bills. Second, we could write a check or cut a check for a refund of an overpayment. We could write a check for replenishing petty cash when needed. The check components include the date, the payee, payment amount entered in figures and words, and then a memo line for recording account or invoice numbers for reference. Rules for writing checks. You want to confirm the numeric and written amounts agree, confirm that everything is spelled correctly, and then follow office procedure for having the provider or office manager approve all expenditures and sign all outgoing checks. Lastly, confirm that the check is payable to the correct payee and the current date is used. Reconciling bank statements must be performed monthly. It's necessary to reconcile the entries to the checkbook against or in the checkbook against the bank's statement to be sure that there are no errors in either the checkbook or the bank's records. The bank statement is another way of ensuring that the accounts receivable is accurate for the previous month. So here's an example of a bank statement, and it kind of gives you the beginning balance up here, and then deposits, and then withdrawals, and then the service charge for that account. And then over here is a reconciliation. And then lastly, petty cash. Petty cash needs to be kept totally separate from the money used to make change for patients. Money that is kept in the office, petty cash is money that's kept in the office for minor, routine, or unexpected expenses. It is not used for paying bills or making large routine purchases. Petty cash eliminates the need of the provider or office manager having to write checks for minor expenditures. Establishing a petty cash fund. When we're doing this, we want to determine how much the fund should be and then write a check to cash for that amount. It should be enough to cover several days worth of minor expenses. Most offices that I've worked in keep around $250 on hand for petty cash. Tracking, balancing, and replenishing petty cash. We have to track petty cash with petty cash vouchers. Keep vouchers on hand to track how the petty cash is used. The voucher must always be completed and the receipt from the purchase attached. The vouchers and receipts are then kept in a petty cash box with the money until the fund is replenished. The balance, we have to balance the account and replenish when the fund gets low by writing another check to cash and bring the balance back up to the original amount. So basically what happens is you keep all your receipts and make sure that all balances out on a spreadsheet and matches up to the amount that is gone from petty cash. And if that all balances out, then you can submit that and then write another check for petty cash. Cash that and get your $250 back and you're good to go. Okay, so that's the end of this chapter 19 lecture. And like I said, the PowerPoint is uploaded for you in week 13 module.